As a homeowner, you have a lot on your plate. You think about your mortgage, insurance, the occasional leaky faucet, but there's another major cost of homeownership everyone needs to understand: property taxes. Think of property tax as your contribution to the community you live in. It's a fee levied by your local government, city, county, school district. This tax is based on the value of the property you own, including the land and the buildings on it. It's a fundamental part of owning real estate in the United States. You'll pay it as long as you own your home, even after your mortgage is paid off. Local governments need a reliable source of funding to provide essential public services we often take for granted. Property taxes are that source. This system ensures communities function smoothly and provides services that keep neighborhoods safe, clean, and desirable places to live. It's an investment in your local area. Understanding this concept is the first step to becoming a savvy homeowner. Many people see their property tax bill as just another expense, but it's much more. It's a direct link between your home and your town's quality of life. When you pay property taxes, you fund what makes your property valuable: good schools, well-maintained parks. Knowing this helps you see the bigger picture. Instead of just a bill, it becomes part of your role as a responsible community member, contributing to ongoing local success and stability. This tax applies to all kinds of real estate, not just single-family homes. Owners of condominiums, commercial buildings, and vacant land all pay property taxes. The process is managed by a local tax assessor's office, which determines property values and calculates tax owed. Bills are typically sent once or twice a year, though many pay monthly through mortgage escrow. That makes managing cost easier, but it's crucial to know what you're paying for and why it matters. Now, let's break down how your property tax bill is actually calculated. It's not a random number pulled out of thin air. The process involves two key components: assessed value millage rate, the local tax rate. Assessed value times millage rate equals your property tax bill. First, a tax assessor determines the value of your home. Assessed value isn't always the same as market value. Often, assessed value is a percentage of market value. Assessors use methods to determine value. They look at recent sales of similar homes and consider specific features: square footage, bedrooms, bathrooms, lot size, recent improvements like adding a deck or finishing a basement. The goal: an accurate, equitable valuation. Assessments run on cycles. Then the local tax rate is applied, set by city, county, and school district based on budget needs. 1 mil equals $1 per $1,000 of assessed value. Example: market value $400,000. At 80% assessment is $320,000. If combined millage is 25 mils, that's 0.025. Multiply $320,000 x 0.025 equals $8,000 annual tax. Ever wonder where your property tax dollars actually go? The answer is right back into your community. The single largest portion in most areas funds public schools. This money pays for teacher salaries, classroom supplies, and the construction and maintenance of school buildings. Good schools can increase property values. A well-funded school district attracts families, boosting demand for homes. Beyond schools, property taxes are essential for public safety: police on patrol, fire departments equipped and staffed, and EMS ready to respond. Your dollars maintain roads through paving, snow removal, and street cleaning, and they support public spaces like parks, libraries, and community centers. These are the places that bring communities together and improve quality of life. A portion also supports local government administration, public officials, the assessor's office, and other functions that keep everything running. By paying property taxes, you're not just fulfilling a legal obligation. You're investing in the financial health and well-being of the place you call home. As a homeowner, you're always looking for ways to manage expenses, and property taxes are no exception. Plan from the start. When budgeting for a home, don't just focus on the mortgage. Factor in estimated annual property taxes. Consider an escrow account. A portion of your tax is included in your monthly payment. The lender holds it and pays when due, making it predictable. Review your annual bill immediately. Don't just glance. Verify details like square footage, number of rooms, and lot size. Errors can cost you. For instance, an incorrect finished basement can inflate value and your bill. Track local sales of comparable homes. If comps sell for less than your assessed value, your assessment may be too high. Use data from real estate sites or a local agent. Keep this data. It's critical if you challenge your assessment. Big improvements like a new bedroom or a pool can raise market value and trigger reassessment. Budget for the likely tax increase as part of the project. Plan ahead to avoid surprises and make informed decisions. One of the best ways to lower your bill is to see if you qualify for exemptions, provisions that exclude part of your property's value from taxation. The homestead exemption for primary residences can shave thousands off your assessed value, but you usually have to apply. Many states offer relief for seniors, sometimes reductions or tax rate freezes, and exemptions for veterans, especially with service-related disabilities. Deductions and credits can also reduce the final amount you owe, including incentives for energy-efficient improvements or temporary abatements for new construction or revitalization. Check your local assessor's website for programs, eligibility, and applications. Don't assume you don't qualify. Apply to reduce your annual burden. If you believe your assessment is too high, you can appeal. Note the filing deadline, often 30 to 90 days, and act quickly. Gather evidence, correct factual errors, and compile 3 to 5 comparable recent sales similar in size, age, style, and condition. Start with an informal review. Polite, professional, prepared. If needed, proceed to a formal hearing, with further state-level options depending on your laws. Now that you know the ins and outs of property taxes, remember, you're not alone on this journey. Staying informed and proactive can save you money and stress year after year. If you still have questions or want personalized guidance, consider reaching out to a property tax professional. Contact FSMC Bookkeeping Services and get expert advice tailored to your situation. Don't forget to like, subscribe, and hit the bell for more smart financial tips. Take control of your property taxes today, and make your money work harder for you.